Moving on to the US oil. On the US oil, I'm very sure we have the same scenario here on the US oil. And if we look at what is happening here on the US oil, if you remember what we talked about here on yesterday, we had two scenarios that was lining up for us during the course of yesterday's trading session. And we were looking out for a buying opportunity and a sell opportunity. And because of that, we had two key levels. We had the key level at $119.50, and then we had a key level which is also the neckline of the reversal pattern we identified earlier. This reversal pattern, this more or less like a reversal pattern to me at this point, and we had a neckline at $118.10, which we were waiting to see price breakdown of that neckline. So for the buy opportunity, that did not hold, as we never at any point saw a breakout of that key level and a retest to give us confirmation to join a an uptrend scenario situation. However, we saw price break down our neckline yesterday. We saw price break down the neckline, which also shares a confluence with the bullish trend line we identified on Monday. We identified this bullish trend line. So we saw price breakdown of that trend line, of that neckline rather. We saw the breakdown of the neckline here. We saw the breakdown, we saw the retest of structure, and we saw an outright move to the downside. So if you are taking that trade at an entry point here, you will be having around how many pips in profit now? You will be in 300 pips in profit at this moment. And that's about how many pips to our take profit target. Our take profit target still remains at $113.50. So we still have around over 100 pips to go. Now that we have this kind of scenario at this point, how do we guide our position as we head into the New York session? Since price is already moving in our favor, definitely we want to look out for where we are going to place our stop loss as we head into the New York session. So if we look left, we can see structures where selling opportunities has actually happened in the past. And if we look at what happened since the beginning of the month of June, we can see how this area at this point has been a selling opportunity for participants in the market, and this area also being a demand zone, and now you can see it's rejected here during the early hours of today as selling momentum increased. Now, what we want to do at this point is that we want to find an area where we will place our stop loss going forward. So for me personally, what I will be suggesting at this point is that we move our stop loss to somewhere around here, which at one point has been a demand level and at the same time has been a resistant level for sellers. So we have somewhere around here, which is around $116.50. Let's say $116.60 at this point. And that is going to be giving us around over 120 pips. And let's see how price plays out. And if price breaks below $114, then I will advise we move our stop loss to somewhere around here, which is the next previous structure. And well, if you think you are not comfortable with that and you think price is going to go back up, then definitely you could move your stop loss to $115.50, and let's see how price plays out. But for me personally, I still think this bearish momentum is still going to remain valid for some time, as we can see this bearish trend line here, and we could be seeing price come back into this area during the New York session, where we will see patterns that support a trend continuation further down. So one thing I'll be advising as we go into the New York session is, first of all, we move our stop loss to protect our position, and at the same time we want to be using this bearish trend line as our yardstick. So let me give this a red to emphasize the importance of this trend line as we head into the New York session. So we have this trend line here. So if at any point in time during the New York session we see price come into this area or do a retest or reversal pattern around this area, we want to enter that position one more time. However, we do not want to see any break. We do not want to take any selling opportunity if price breaks above that trend line, as there is a possibility that price could climb to the upside from this area. So this is what my scenario here is going to be like on the US oil. So if you are taking advantage of that move from that entry point, I want to say kudos to you. Well done. And for CAN, this is what I was talking about when I say we look out for signal first, then we look out for confirmation. When we see signals, we don't get too excited. We just wait for confirmations to happen. And if you look at what happened here, we saw the signal in the form of a breakdown of that neckline, that gray neckline we have there, and we saw a retest of structure which gives us a confirmation that price is going further down. And if you look on lower time frames, you will see structures that support a trend continuation to the downside. And if you are if you're following this pair very closely, you would have had one or you have two or three more positions on this one. As we saw price move down, we saw another rejection here, then you could have had one more position to this trade going further down. So this is the scenario we're looking out for.